My name is Angie. I am a financial analyst and currency strategist for Olymp Trade. This is our third stream about Forex, and today we're going to talk about technical analysis. Please let me know if everything is well with the sound and picture now. Much better. Oh, Kote, thank you so much. Abraham also, thank you so much for letting me know. Alrighty, so I do know that you can see me and you can hear me well. Can you let me know what country you're joining me from today? I normally have my streams a little bit earlier, around 2 p.m. or 3 p.m. GMT plus 3. This week I'm having evening streams, so today and tomorrow will be 7 p.m., so the same time, GMT plus 3. I checked in our last week if 3 o'clock is a comfortable time for you all to watch streams. And it's a complicated question because a lot of people are joining from different countries and from different regions. And of course, the time is different in different regions. So is this, I just want to check with you guys, is this a comfortable time to have streams, or would you prefer something a little bit earlier? Just so that I can get some, some information so that I know for our future streams. Of course, I wouldn't be able to accommodate everybody, but I can try to form a time that's best for everyone. Hello from South Africa. Hello, Nigeria. Hello, Ghana. Hello, India. I'm really bad at pronouncing names, so I'm probably going to try to avoid that, especially if it's a hard name. But Wonder Smush, Jasper, Singh, Peter, Abraham, thank you so much. If you guys can just let me know if this is a comfortable time for you to watch streams, I'll go ahead and get started, and then I'll check back in chat. I do welcome you to join in chat. I do have a lot of information to tell you about today, so I will check in at the end. And if you can, relative questions to the topic would be fantastic. So today we are discussing technical analysis. So this is webinar 3 in the series. The series is 8 streams. Previously, last week we discussed the overall online trading platform and the advantages and stuff like that. And then last Wednesday, we also discussed fundamental analysis. We went over like the economic calendar, and we discussed different currency pairs, the trading sessions, because, there's several different trading sessions. If you missed the stream, no worries. The links are in the description of this video. Starting with the online trading platform fundamental, and then tomorrow we will continue the same time at 7 p.m. with money management. And then next week, on Tuesday, we'll talk about how to make your trade profitable. We'll go more into like stop loss and take profit. Well, that will be more tomorrow, money management. And then we'll discuss the different trading styles, the day trading style, where traders are open within the same day, swing trading, and position trading. So the links to those videos, future streams, are also in the description of this video. So you can go ahead and set yourself a reminder so you don't miss it. Let's go ahead and do a quick little recap about the online trading platform. As usual, I'll go ahead and show you. Here in the upper left corner is where you can choose or you can view and choose the different assets that Olymp Trade has to offer that you can trade. You can just click on the drop-down menu, and you will see here we have cryptocurrencies with Bitcoin and different kind of cryptocurrencies. We have regular cross currencies like the Australian dollar and the Canadian dollar and the Japanese yen, and basically all cross currency pairs. We have metals, which is gold and silver, and indices. On Forex, we have available ETFs. ETFs are a combination of stocks. And they form a portfolio, so they are bundled in together, and they can they can be for a certain sector, like real estate, or it can be a combination of different ones. Also in the same menu, you can choose between options and Forex trading, because the Olymp Trade platform is a combination of two. You can enjoy options trading and Forex trading. They are different, and we do have a stream that explains the differences. So definitely remember that. I'm since this is the stream, the series is about forex. We'll be talking about forex and basically technical analysis. This same technical analysis that we'll be discussing today, you can use in options as well. So this is where you can choose the different assets. Right next to that is what we'll be talking about today. This symbol is the indicator symbol. It looks like a little A to me personally. And if you click on it, you can see the full list of different technical indicators that you can use on the chart for your trading. And we'll go over some of them in just a moment. Next to that, you can change the way the chart is displayed. Basically, right now we have the regular Japanese candlesticks. And that's what we'll be discussing more today. But you can also change it to an area chart. An area chart will show you the closing prices. There's also bars. This is like the American classic version. It's very similar to Japanese candlesticks. I personally prefer Japanese candlesticks. I guess maybe because I just got simply used to them. But that's where you can change the different styles. Maybe you like a different one. Let's go to the other side of the platform. I'm just going to go over a few of the benefits, like the main benefits, and in case you forgot or in case you were joining for the first time. On the other side, some of the key advantages of Olymp Trade is that first of all, there is no spread on the chart. The price that you see on the chart will always be the price of the trade opening and the trade closing because there is no spread. The spread is the difference. Like, have you ever gone to the bank to change money and you see there's a difference in the rates where they'll take your money and they'll exchange your national currency for, let's say, the US dollar for one rate, and they'll do the other transaction with a slightly different rate. That change between those rates is the spread, which is technically the commission, a commission charged. So there is no spread on Olymp Trade. There is a commission charged for opening a trade, and you can always see the amount right here. Let's see here. There is no double rollover commission on Wednesdays as compared to classical Forex. Rollover commission is also basically the interest rate charged for keeping a trade open overnight. And basically, there with classical Forex, there's double rollover commission on Wednesdays charged. Basically, it's calculated for the weekend. With Olymp Trade, you don't have to worry about it. We do not have that, so just remember that. Let's see here. So basically, another great advantage is that you cannot lose more than the amount of your trade, regardless of how much you have deposited on your account. So you see right here, I have 10,500. But if I open my trade for $250, $250 will be the maximum amount that I can potentially lose for that trade. Right next to the amount of the trade is the multiplier. The multiplier basically gives you an advantage to use a higher amount for your trade. And basically, like we discussed in our previous stream, if you are confident in the trade and you have several signals and you're very confident about the trade, you can use a higher multiplier for something like 200 or 500 because the higher the multiplier, basically what you would do is you would take the amount of your trade and multiply it by one of these multipliers. So if I'm trading with $250 with a 50 multiplier, it's in essence as if I'm trading with $12,500. If I choose the 500 multiplier, it's in essence if I'm trading with $125,000. So if I am confident in the trade and the trade moves in my in the direction of the trend of the trade, excuse me, the profit will be more substantial because the amount of the trade is essentially bigger. But you have to remember that the multiplier can also act against you if the trade moves in the opposite direction, and that's because the stop loss is going to be closer. We are going to discuss more about this, and I will show you this more tomorrow, so definitely don't forget to come and see me tomorrow at 7 p.m. Now that we went over the overview of the online trading platform, let me go ahead and explain the candlesticks first and foremost, I guess, because that's one of the main and most important things that you have to understand. So Uh, a red candlestick means that the price went down, and a green candlestick means that the price went up. There's two parts to the candlestick. There's the body, that's the shaded in part, and there's the wick or the tail, and that's the thin line that you see from the body. The body shows how much the price, where the actual price opened and closed. If you're looking at the just the, basically just the candlestick right here, and if it's a red candlestick, I keep saying sticks, I know that the price opened here, and I know that the price closed here. This wick, this shadow, it shows me during this duration of the time, and that's the time frame, which you can change down here. This basically shows me how much the price has changed within 4 hours. So basically within 4 hours, the price reached up here and all the way down here, but the actual opening price and closing price also fixates. And you can actually see the opening, close, and maximum and minimum, the exact prices, if you hover on the candlestick, and you can see it displayed in the lower left corner. Now, so that was the overview of the online trading platform. Let me just quickly about fundamental analysis. Now, fundamental analysis is the study and observation of macroeconomic indicators. That's basically statistics that gauge the state of the economy, political issues, and other factors that may affect the supply and demand of an asset. And again, if you want more interesting about fundamentals, check out my stream from last week. In the upper left corner is your main menu. If you click on analytics, that will take you to the economic calendar, just in case you forgot. Now let's go ahead and turn to technical analysis. I love technical analysis personally. Let me explain. Technical analysis is the study of the price movement and history behavior on the chart. You can look at past and current data and how on the chart and find certain patterns that can help you find some great trading opportunities. So with technical analysis, I like to say that the old saying, history tends to repeat itself, works perfectly. So today we're going to talk about support and resistance, how to set them and how to use them on your chart. I'll tell you about moving averages and how to use them, and we'll also touch up on Fibonacci. Now, there are three things that can be happening on the financial market and consequently on your chart. Now, I'm going to be showing you charts today on a 4-hour chart, but of course you can change it right here in the bottom center, I would say. Alrighty, so what are the three things that can be happening on the financial market and consequently on your chart? The price could be moving up. This means that traders and investors are buying the asset. This means that the market is moving in an upward trend, and it also means that the trend is bullish because buyers on the financial market are the bulls. Now, the second thing that can be happening on the financial market is the price could be moving down. This means that traders and investors are more interested in selling the asset or the currency pair at this time. This is a downtrend or a bearish trend because on the financial market, sellers are bears. The third thing that can be happening on the financial market is that it could be moving sideways. This means that the market is undecided and neither the bulls or the bears are in control of the market. And when the price is moving sideways means that there's no trend. And also it's called that the market is moving in a flat. So first, let's go ahead and support and resistance can be drawn different ways. First, we'll look at horizontal support and resistance. What we'll do is we'll go ahead and go into our technical indicators, that little A that I was telling you about. And if we scroll down in the drawing, we have horizontal line, vertical line, and trend line. We'll go ahead and we'll be discussing horizontal and trend line today. So we'll go ahead and choose horizontal line. Now, How do we properly set resistance and support? Uh, Basically, a level of resistance is on top. That is where the price starts to resist higher prices. Basically, we would set a our level of support and or resistance to get the maximum amount of price touches. Areas of resistance or support are areas where the price either stalled, that means it stopped, or it has reversed. So these are key levels of support and resistance. It's where the price reaches this certain level several times. So basically what we do is we look at the chart and we try to identify these areas, but we try not to look too much, and because you can find a lot of different levels. But you have, what you want to pay attention to is that you want to get the maximum amount of touches without the price actually breaking or moving beyond the level. So basically what we can see is right here is a level of resistance. And I can actually move it down a little bit to maximize my touches. Now, because this is the end of an uptrend, I do see a few peaks, but and we'll discuss breakouts in just a little bit. But basically, right here, I have 1, 2, 3, 4, 5, 6 touches. I do have a few breakouts, but then again, you have to consider that this is the end of an uptrend. So the bears and the bulls were kind of fighting over there. I'll go ahead and choose another one. Let's see here. And since the price is moving horizontal, let me go ahead and basically show you a little bit more on what the price is doing currently on the chart. I'll go ahead and set a level right here. And as you can see, the price, it stalls, or it has stalled several times at this level of resistance. Now, a level of resistance can also later turn into support. So it works both ways. The level will be respected. What I mean is that first, this area, it was an area of support because and it failed to break below this level of support. So resistance is on top, support is on the bottom. The way I like to remember it is it's in alphabetical order. It's RS. R is on top, support is on the bottom. So, and also right here, basically, just choose another horizontal line, and I see that the price has stalled here. And basically, I go back and I check the history to see if these levels are actually respectful. So we want to get the maximum amount of touches without the price actually breaking the level. Okay, and we would probably set one down here as well. Now I'm just showing you how to properly draw these first. Another thing that I would like to mention is that you definitely don't want to clutter your chart too much, and also basically you want to enter the levels of support and resistance that you will be using so that you don't get confused. Let me go ahead and take this one, 688280. That would be this one. Alrighty, so basically this is how we would place horizontal trend lines on our chart. Now these are horizontal, so we can set like maximum and maximums and lows. Now when there is a trend on the market, another thing that we can use is it's what I use more often than the horizontal line is a trend line. So when there's a trend in the market, so the price is either moving up or down, it's not moving in a flat, we can also draw a slanted trend line of support and resistance. Let me go ahead and show you this right here. Well, we had a really, really great downtrend right here. So basically what you would do is, let me go ahead and delete these for now. In the same indicators, if we scroll down, we can click on trend line. And the way that we would draw a trend line on a downtrend, we would connect the tops, the highs or the peaks. to follow the trend. Okay, and we can go ahead and adjust these to get the maximum amount of price touches without the price actually breaking this level of resistance. Remember, resistance is on top, so this is our level of resistance. And as you can see, this is a very strong trend line because we have no breakouts, no false breakouts, and actually a lot of touches. So when we actually do encounter a breakout, will signify a change in trend potentially. Another thing that we can do is we can draw a channel. And that would be basically another duplicate trend line on the bottom. And that would be, this would be our level of support. Now, basically, when you have a channel, this will kind of help you with some people like to trade on retracements. So basically, when we reach this trend line, when the price touches the trend line, it's very likely that it's going to start moving down, and then it reverses. So basically, and we'll talk about the reversals a little bit later with Fibonacci. But basically, whenever the price moves in the direction of a trend, it moves down and then it retraces, and then it moves down and then it retraces. That's the life story of the price movement. So basically, you can have you can form yourself a channel to help you with your trade. Likewise, the same scenario on an uptrend. Now, on a downtrend, you first connect the highs, the tops, or the peaks. On an uptrend, it's the opposite. So basically, you would use the trend line and you would connect the lows, the minimums, to get the maximum amount of price touches without the price actually breaking the trend line. So that's how you would enter your trend lines. Now let's see here. What another thing that I would like to tell you about technical analysis is the moving average. Okay, let me see here. Let me draw something a little bit more current. See, it's a little bit unfortunate. Today is Tuesday, October the 8th, and there's really not a lot of signals on the market, on the financial market, because everybody is waiting for fundamentals. The U.S.-China trade war negotiations are to take place this Thursday, and also Brexit negotiation deals are they're trying to see if they can come up with an agreement by this Friday. So we have a little bit of a hush on the market right now, but we'll definitely analyze it the best we can at this moment. So this is more recent. Okay, we had a trend line down, and then we had a trend line up. Well, let me just do a little bit more current. So we had a trend line up, and now the price is actually moving in a flat. And this is a great way. Let me see. Can you see? Let me move myself up right here. How is everybody doing in chat? Is everybody doing okay? Let me just go check on you guys. Okay, it is a good time. Hi. Well, basically, the Dragon Ball world, the level of resistance is on top. It is where the price starts resisting higher prices, and support is on the bottom. That is where price starts supporting the price and starts moving up. So you just have to remember resistance is on top, support is on the bottom. And basically right here, this is a level of support. So once the price breaks this level of support, there is a trend in change, or basically a signal for a reversal. As far as breakouts, I do have, I had a stream about breakouts. But let me go ahead and basically tell you the way that you can determine if it's a true breakout or not, a false breakout. There's really no way that you can identify a false breakout. Some of the tricks that I can tell you is that when when it is the wick or the tail, the shadow of the candlestick, it's not considered a breakout. A breakout is considered when the price, the actual body closes beyond the level of support or resistance, and the more the better. Basically, like 3/4 of the candlestick should be beyond the level of support and resistance. But the best way is to wait for a confirmation. Basically, just wait to see where the price goes, because a lot of times false breakouts occur when basically traders enter trades prematurely when for example right here we had a downtrend, and the bulls, the buyers in the market, thought that the bears ran out of steam, and they started buying. But as you can see, bears were still in play, and they pushed the price lower, taking advantage of this higher price. And then we had the actual change in direction of the trend, basically. Okay, let me just see here. Let me go ahead and continue with my moving averages. So in the menu of the indicators, it's all the way on top. We'll go ahead, and there's different moving averages. There's the simple moving average, there's the exponential moving average, weighted moving average. They're basically the same. They work basically the same way. There is a slight difference in calculation, and you can check them out if you want. But the simple moving average is one of the more simple ones. It is displayed as a curved line that usually follows the direction of the price movement. The simple moving average is one of the simpler indicators, which is based on calculating the average price for a certain period of time. The moving average calculation equally considers all closing prices, starting from the first and ending with the last. The moving average also has a moving average period, and that means how many candlesticks will be displayed in the data. So basically, we have a simple moving average with a 10 moving average period. And that means that it is calculating the last 10 candlesticks. Each time that a new candlestick appears, the moving average recalculates and takes the last 10 candlesticks. So the number of closing prices are used to calculate the value of the moving average, basically. So people like to use different moving average periods. For example, if we choose 5 as the moving average period, this is more for like a hyper trader. It's going to have a lot of movements and a lot of changes. And this one is probably best used if it's combined with another simple moving average. And to get a signal, we'll talk about that in just a few seconds. We can have like the default 10 moving average period. The 20 moving average period is basically like a bridgeway between short-term trend and middle term trend. So a 10 moving average period, and also 20 moving average period, it's going to show us the short-term trend. That's because it's taken only 20 previous candlesticks. When we change to, let's say, 50 moving average period, that is going to show us the midterm trade. So how we can expect the price to move in the midterm. And for example, the 200 a simple moving average, or the 200 moving average, is best for to identify a long-term trend. So basically, for the Australian dollar and the US dollar, as you can see with the 200 simple moving average, we see that the price is moving in a flat, so there's no trend in the market. But that's the long-term trend. If we, for example, jump down to 20, currently the the short to midterm is actually bullish. So the moving average, basically it shows us the direction of the trend. If the moving average is pointing up, then we have an uptrend. If the moving average is pointing down, then we have a downtrend. One of the signals that you can use with the moving average is when the actual price moves either below or above the moving average. So basically right here we see that this was a reversal to the upside, and we see that the price previously was below the moving average, and here it has crossed above the moving average line, which gives us a signal of a change in trend. And basically you can see the same situation here. Now we can go ahead and up the game, if you will, and we can do, let me go ahead and take these off for the time being. We can get a signal where two moving averages cross each other, which also gives us a signal to open a trade. So basically, if we have a what we can do is we can go, we discussed the short-term trades a little bit earlier, but since I'm on the 4-hour, let's go ahead and do the, for example, 10. And then what we can do is we can choose another SMA. And basically what you can do, I'm sorry, I didn't show you this, but you can click on the little pencil right here to edit the indicator settings. And here's where you would change the moving average period. For example, I have the 10, and let's say I have the 50. And right here, I'll go ahead and change the color so that I can see it. Now, what happens here is that we have a when we have a crossing of two moving averages, increases the strength of the signal. What you have to remember here is that the longer moving average will be more calm. It won't be as active, basically, and will point the direction of the overall global trend. So that's the moving average with the higher number. So it's the longer moving average. I have marked it red, and basically it's going to be so the overall trend. Now the second moving average, the smaller moving average, is going to be more acting like a conversion line. I use the Ichimoku cloud a lot, and I actually have a separate stream about that. I'll definitely hold another one. I had some technical issues there, but I love the Ichimoku cloud. The concept is basically the same, where one moving average is longer and one is shorter, and then they have the crosses. Basically, when we have a cross, a bullish cross, and it's when the moving averages cross and the trend becomes bullish, that is called a golden cross. And when the moving averages intersect to the downside, it's called a death cross. So I'm going to call the shorter period moving average as the conversion line, because when it intersects the slower moving average, is when we get a signal. And another thing that you can do, basically, as we're looking at the conversion line. Oops, I just took that off. Let me go ahead and put that back on. Basically, since we're looking more on the shorter moving average for our signals for when it crosses the longer moving average, we can also make it thicker so that it's more visible. So basically, definitely play around with these different settings to make your trading as comfortable as possible. So here's the thing: when the shorter moving average is going to be more active, you will see it changing more with the price movement. Now, when the shorter moving period intersects the longer moving period up, that means that we have the trend is bullish, so it's an upward trend. And when the I keep wanting to say conversion line and baseline because that's how they're called in the Ichimoku cloud, and it's kind of it kind of makes sense basically to me. The baseline is the longer moving average, that's the one global trend, and then the conversion line is that one that's giving us signals. So when the shorter one crosses the longer one to the downside is when we have a signal to enter a sell trade. So basically, this is how the moving averages work, and you can definitely change these to different combinations. A lot of time for like longer term trades, we would use the 50 and 200 EMA. Okay. Now, when we have so basically, these would give us strong signals for basically like more mid to long term, for more mid to long term. So this is how the moving averages work. What else did we want to talk about today? We also wanted to talk about Fibonacci levels, the Fibonacci indicator. It's also definitely probably one of my favorites. Excuse me. It may be a little bit complicated. It may seem a little bit complicated at first, but it's really a lot simpler than it seems. Fibonacci corrections levels, they're levels of support and resistance. Think of it basically as of like the floor and the ceiling of a price movement. So basically, you have to capture the beginning and the potential end of a trend and set your levels as the price starts to move in the opposite direction. Let me go ahead and let me show you this right here. So we had a downtrend right here, and we see that the downtrend actually ended. So in our indicators menu, we go down here and we choose Fibonacci levels. So with the Fibonacci levels, what you would do, let me just give you a little bit more information. These hidden levels of support and resistance with the Fibonacci levels, they are created by a mathematical sequence. Four common and most popular Fibonacci retracement levels are 23.6, 38.2, 50%, and 61.8. Now, in order to enter the grid, the Fibonacci grid on your chart, on a downtrend, you would start with the last high or the top of the or the beginning of the downtrend, so basically the top, and you would drag it all the way down here to the last minimum, basically the end of the downtrend, and just fixate it here. You may want to extend it forward so that the chart is fully displayed on your chart. So as I mentioned, the four most common and popular Fibonacci retracements are 23 and 6, 38 and 2, 50%, and 61.8. One of the most important rules of trading is the following. As I mentioned earlier, markets tend to retrace, meaning that the price tends to return by a fraction of a third or a half of the length of the previous trend before resuming further movement. This is why the 50% Fibo correction is an important level that the price tests. And basically what you see here is that the price can actually, after the movement, the price can retrace up to the 23 and 6 initially, then the 38 and 2, and normally retraces up to the 50% Fibo level. If it breaks above the 50% level, and that is normal, it is okay, it can actually retrace all the way up to the 61.8 Fibo level. If it breaks the 61.8 Fibo level, then that means that the direction of the trend has changed. So these are just some of the rules for Fibonacci levels. And basically, Let me see here. Let me see here. And as you can basically see that right here, the price is very respectful of the 50% feeble level. Let's see here. What else did I want to discuss with you? I also want to discuss with you a few patterns. Let's see here. I wonder if I can find an uptrend. Well, let's see here. A few of the patterns that I'm just going to shortly touch up on today is called the double top and double bottom. Ooh, excuse me. Just wanted to check in chat. Let's see here. Let's see here. See. Bangladesh, welcome. Sure, you're welcome to join us, of course. Which of the moving averages follow the price changes very closely? They all work in a similar way. The simple moving average, the exponential moving average, and the weighted moving average. The exponential moving average, the EMA, is technically considered to be the smarter moving average. And I personally use the EMA, but they all work in a similar manner. Music teen, I'm sorry, Jupri, I don't understand. Okay. Okay, triangles, bull flags, and bear flags, I'll probably touch upon in a different stream. Let me go ahead and just tell you about some of the main ones. For example, the double top and the double bottom. Actually, the Australian dollar and the US dollar had a great picture in June. Let me just go ahead and show you. And I highly encourage for you, you guys to check when you're learning technical analysis. Check the history of the chart, see how the price moves and how certain levels are respectful, and how when you're looking at the chart, it has to be like a second home to you. It's just and it'll come to you. So definitely don't give up and just keep learning and keep practicing. It's great. So one very popular sign of a reversal is a pattern called a double top or a double bottom. And that is basically a double top means that, let me go ahead and draw this level of a horizontal level of resistance right here. So basically this is the level that the bulls, the buyers, were not able to break. And what happens is here is that we had an uptrend. They failed to break this resistance. We had a move down, and then the bulls tried again to break this level of resistance, and then they failed again. This double failure means that a lot of times, now none of these trading tools or drawings or indicators are 100% possible, 100% are 100%. They are not 100%, but a lot of times when you see a double attempt to break above, but a failure, that's why it's called a double top. It's a lot of times it may signal a change in trend, and that is exactly what we see here. So bulls tried and failed, they tried again and failed, and then we have a big move to the downside. So definitely look for these like an M or a W on your charts. Now another one that is similar to the double top or the double bottom is called a head and shoulders pattern, and that's where basically the level or this area is or the bulls or the bears, they failed 3 times. You won't see the head and shoulders pattern. You'll see it less frequently than the double top and the double bottom, but it is actually an even stronger inclination that there is a trend change in trend. So basically, this is a reversed upside down head and shoulders pattern. And what it means is that basically we have a shoulder, a head, and then another shoulder. And these are all attempts by bears to break lower. And but you can see that bulls, the sellers, buyers are taking over control. The way that you would look for the confirmation lines for the actual signal to enter a trade on a, for example, on a double top, you would connect the middle. So it's like the middle line of the M and make a line right here. So basically this would have been the entry point for a move down. So basically when it comes to that middle point, and with the head and shoulders, it's basically kind of similar. So we have a shoulder, head, shoulder, and if we connect these right here, this line, the line of the other side of the movement is where we would have our entry signal. So basically this was a great example. And AUD USD is, as I noticed, is very famous on the double tops and reversals. So my friends, this is basically a light version of technical analysis because there's just basically so much there's so much interesting stuff, and the different currency pairs, and that different currency pairs act differently than other currency pairs, and even in respect to like trend lines and stuff like that. So definitely check them out and try practicing. If you enter a trend line and it's not working out for you, delete it and then try again. So basically, this was my stream on technical analysis. Tomorrow we will be discussing money management at 7 p.m. Let me just check to see how you guys are doing, and if you guys have any more questions. Okay, I do see, I guess you guys having a discussion between yourselves. Okay. Well, my friends, thank you so much for joining me this evening. It was very interesting. I've never done a stream in the evening before. If you enjoyed my stream, my friends, please give me a thumbs up, share your thoughts, leave your comments in the description. And my friends, I really hope to see you tomorrow for money management. We'll discuss stop losses, take profit, and basically how to set them. And money management is a very important part of trading. Thank you so much for joining today, and I will see you guys tomorrow. Have a great evening, everyone. Bye-bye.